Today is Sunday, April 6th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button and let's get into it. For the events last week, it definitely wasn't terrible. On Wednesday, the ADP employment report came in better than expected at 155,000 versus the anticipated 120. And then the non-private sector employment report was also better than expected at 228,000 versus the anticipated 140. And then initial jobless claims beat as well at only 219,000 when the street was looking at 228. Unfortunately, the unemployment rate did tick up to 4.2% versus the expected 4.1. The hourly wages remained consistent at 0.3, but unfortunately, the year-over-year hourly wages did come in short of expectations at 3.8% when the street was looking for 3.9. So I'd say not too bad overall. But of course, the biggest story this week was definitely Trump announcing his tariffs, which at least for the moment is definitely not being taken well by Wall Street. And then next week's going to be super important. On Thursday, we have the initial jobless claims, but more importantly, we're going to have the CPI report, which stands for Consumer Price Index, and that's the inflation data point that the Fed watches most closely. And then on Friday, we're going to have the Producer Price Index, which is how much it costs companies to produce the goods that they sell. So this is what the SPY chart looked like for my latest update on Tuesday. I was feeling pretty optimistic about the direction the market was going. It seemed like we were starting to create the pattern of creating higher lows. On Wednesday, the markets were able to make some more gains, but you'll see the markets since Trump announced the tariffs at market close on Wednesday have absolutely gone down the drain. So if we zoom in, you'll see that it's been a 10.51% drop since Wednesday's close. And in the process, we not only crossed through one, not two, but we actually crossed through three support levels. And we're only just above another 1% decline from reaching this fourth one. And if we zoom out to give context, that's exactly where we were a year ago. And if for some reason we do cross below the fourth one and reach the fifth one, which would be a 6.76% drop from where we are right now, that would put us all the way back to where we were last January, essentially erasing all of last year's gains. So hopefully we don't end up gapping down Monday morning and end up opening in this area, because that would almost certainly mean we're heading straight towards this lower support level. The market has been super resilient though. Over the last year, you can see that there's multiple examples of V-shaped recoveries. Of course, the markets are definitely not just going to recover straight up, but if this week we can at least find a little bit of footing and not go below the support level, I would like to think that we've experienced the brunt of the tariff announcements, but it's definitely not an easy time to be invested in the stock market. These are going to be all 14 of my current positions. Right now, Meta, Nvidia, Microsoft, Costco, and PayPal make up my top 5, and those are going to make up 54.01% of my portfolio. So definitely not easy to look at. My top 3 positions are at a 16.8% loss, 29.53, and then a 14.8. We'll see how the market does on Monday, but right now I do plan on continuing to hold all of my positions. I am 94.22% invested, which means I only have 5.78 sitting in cash. I really wish I was at about 20% in cash right now, because that would make the decision a lot easier, because I know that I would be looking to buy in dollar cost average. So it doesn't really make sense to sell anything, because if I did have that 20% in cash, I would be buying. So again, at least for right now, the plan is to keep everything exactly the same. Since Wednesday, Pershing Square had a loss of 9.98%. The S&P 500 had a loss of 9.93%, and my portfolio saw a loss of 10.27%, which brings this year to date, Pershing Square is at a loss of 10.42%. The S&P 500 is at a loss of 13.54%, and my portfolio is at a loss of 13.64%. That's going to do it for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.